Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 5 o'clock in New York. It is Monday, December the 16th, 2019, and this is the Daily Report for Gold and Silver. With the exception of gold, the precious metals markets are trading higher today. We do have palladium closing at a new record high. We'll look at a chart during our technical studies. But as far as gold goes, the fact that it is down, in light of the strong U.S. equities markets, which would be supportive of the industrial aspect of the other precious metals, and the agreement reached on Friday concerning the Phase 1 partial agreement between the United States and China, I believe gold is holding up rather well and is pretty resilient in this area. The other thing we want to note is that in terms of seasonal tendencies, over the last, say, 13 to 15 years, the majority of those years had actualized a solid rally as we went into the end of the calendar year. We could easily see that occur again today. But, well, let's take a look at the price board. Gold was trading lower for the morning and afternoon trading session. It has reopened after the break, is currently showing up 90 cents. But if you look at current pricing, that is at $14.7960. Platinum is trading at $937.60. And palladium, which has been really giving a little bit back, finally broke back below 1900, $18.9410, and silver is back above 17 at 1707, and that is all within some pretty strong headwinds of the US dollar. Let's take a look at our charts. I did want to spend more time on the pennant and flag formation that we have seen unfold in recent times. We can see that in terms of action today. Let me go ahead and blow this up. What we can see is that this market has been extremely quiet. We have had now 3 dojis in a row. In other words, we have had trading days in which the open and closing price were the same. Make that 4. And we continue to see the most disturbing thing in terms of wanting to see a bullish move, and that is that price action seems to really hang on to the 50-day moving average, because when we look at it, we can see that we have had a series of multiple occasions, 3 in the last 3 trading days, in which pricing went above it but closed below it. We got one last week and then one the week before that. Nonetheless, it does tell me that we are getting close to this apex. And whether it breaks to the upside or downside, I think that we will see some sort of release of energy. The other thing that's quite apparent when we do look at this chart is the moving averages are tending to move further apart. They can either be moving closer or further apart. Now remember, these are hugely lagging indicators, one lagging for 50 days, the other from 100. But when we pull up our MACD, which is moving average convergence divergence, we can see that they're also widening. We do have our lower average on the bottom and our higher average on the top. And that tells me that we could be setting ourselves up for some sort of a bullish move. At this point, I would be surprised if we saw it through next week and even through next year. But at some point, I believe we will see a major break in the market. Now, I did get a question from one of our subscribers by email the other day, and he asked me really what was the difference between a pennant formation and a flag formation, and why I said that this is a bullish pennant or flag formation. And that is quite easy to answer. The first thing in common between both patterns is that they have this large flagpole, and that's what this is right here. Now, when we look at what is called a flag formation, it is really more like a flag in that what they're looking at is almost parallel lines. They can be uneven, but you can see that we have these parallel lines coming out and in essence forming a flag. So this is your typical flag formation. Now, on a pennant formation, it is a little different because it is drawn from a symmetrical triangle. And that's exactly what we have here. By plotting a series of lower highs And that, of course, is our upper level resistance line. And then by plotting a series of higher lows, which contain our support lines, we really get this pennant. And that's what this is right here. This is your textbook example of a pennant formation. Now, I've also called this a compression triangle because I think that that more aptly describes what we're looking to see. And so as we get close to the apex, energy is building by virtue of a contracting range. That energy is released when we get a break above or below either the support or resistance line. Maintain your current neutral stance. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.